Ford Motor Company, ticker symbol F, is currently trading at $9.97 a share. It recently had a big drop of around about 30% from $14.50 to its current price. Currently, it pays a 6.02% dividend yield. So that is very interesting for dividend investors. But we're going to be doing today is seeing if this is a buy or a sell. We're going to be looking at my automated stock valuation spreadsheet, then giving its fair value based on discounted free cash flow model, comparable company model, dividend discount model, and the Ben Graham formula for intrinsic value. So as I said, we'll just look at this chart over the last year. It was trading pretty nicely between $11 and $13, almost hit 15, and then on the 15th, it had a big drop around about 30%. Over the last 5 years, similar story as well. Got to its most recent highs in 2022 of around about $25 a share and has dropped 60% since then. So let's have a look at my automated sheet. If we put in the ticker F, this will load up all the latest company financials so we can see if Ford is a buy or sell. If you're interested, please check out Patreon. Links are in the description. But $9.97 a share, market cap of just shy of $40 billion, PE ratio of 11.37, and with a market average of currently 30.98, it is a lot lower than the market average. Earnings per share of about 88 cents, beta of 1.16, meaning is a lot more volatile than the market. And analysts do say it is a buy at just about $12 a share. Now, dividend investors, as I said, it pays a massive 6% dividend yield, which is about 60 cents a share. $2.3 billion they pay out each year. In terms of the net income, as a 66% payout ratio, and in terms of free cash flow, 37%. And if you want to get paid this quarterly dividend by before the 7th of February, as that is the ex-dividend date. So let's have a look at the revenues of the company. All-time highs, $183.24 billion. They had a big drop off in a certain year where there was a pandemic, and they have been growing revenue steadily since then, and they have hit all-time highs. So it is growing, which is what you want to see. Now, are they able to generate more profit with that revenue? The answer is not really. Now, they had a big year in 2021, down in 22. 23 was 4.35 billion, and trailing 12 months, 3.53 billion. So down slightly despite these increasing revenues. Free cash flow, what is the free cash flow saying? 6.21 billion. So they've actually had less free cash flow in these 2 years. Obviously 2022 they had minus 100 million. But in recent times, this is the lowest it has been. Now, if we look at this, this is the operating cash flow minus capital expenditures. Operating cash flow is blue, CapEx is the red, free cash flow is the green. Operating cash flow has increased in 23 and the trailing 12 months. CapEx has been steady or slightly increasing, but operating cash flow is down quite a bit from where it was in 19, 20, and 21. Shares outstanding, what are they doing? Well, they've actually been issuing slightly more shares, although it looks like they've done a small buyback in the last year. So that is quite good if they're starting to buy back their shares, rewarding shareholders that way. So let's have a look at the discounted free cash flow model. This is a way of calculating a stock's value based on its future free cash flows and discounting them to today's value. It seems the weighted average cost of capital for Ford isn't loading. So let me just have a look at this. Normally we put in quite a high value, but the discount rate, I'm just checking a few different sites here. We'll put in 8.5% as an override here. Minus $69 a share, so that's not good. Now let's have a look at these numbers and see if we agree with them. So revenue estimates, we're expecting growing, if they keep it up at this rate, about 6% growth, 195 and 209. If we look at what analysts are saying, analysts are expecting 176 billion in this year and 175 in the next. And if we look at the sort of general growth rates, they're actually expecting negative growth over the next year, so that is not good. So we said 100 and declining revenues. That's not what we want to see. So yeah, we'll go with that. We'll go 0. Net income margins, I think I'll take an average of these last 2 years, bring this down a little bit, 2.1%. And finally, yeah, this is why we're here, because the net income to free cash flow, once again, we'll take an average of these 2 years, 198, 197, and interestingly, $34 a share. So undervalued in terms of discounted free cash flow model. Even if we do declining revenues, we'll say it declines about 2% a year, still 32. Net income margins, it looks like they are decreasing, even on the more bullish, bearish side, 1.5%, $22 a share. And let's say we look at the most recent year, still $20 a share. So quite interesting that discounted free cash flow really does like this stock, but with these ratios around about 6.38 in the most recent year and 3.5 over the last 5. No, that is why the discounted free cash flow model likes the stock. We'll quickly look at the dividend discount model. I guess dividend, because they did increase the dividend, increased it quite a bit here. It's all over the place, really. So we're gonna skip this again. Ben Graham formula for intrinsic value. This is Ben Graham's formula. Looks at earnings per share, PE of a non-growth company, AAA bond yield, corporate bond yield. Although we did see that it's expecting negative growth, and that means he will put it. Okay, that's $5 a share. So let's just have a little look and see what analysts are actually saying here. They said, yeah, minus 1% in the next year, which is unfortunate, but it does put it at $5 a share. If they're able to get even, where would we need to be? 5% growth, 6% growth, it would be a buy or about fairly valued, but Ben Graham does not really like the stock, which is why finally we like to look at the comparable company model. It's the way of valuing stocks, looking at their competitors, and then we can see if it is a buy or a sell. So I think their most direct competitor is GM, General Motors, and what this will do is it'll load all the latest company financial data for these companies so we can compare them. Now, I'm going to do it in a few ways here. We're going to compare it to General Motors directly. We'll just compare the two here. Let me just see if everything's loading here. Oh, it is not liking that. That's a shame. Okay, we will do Rivian as well. And we'll do GM. Oh, now it's loading. Okay, let's try it again. GM. There we go. That's much better. Fine. Apologies about that. I don't know why it was being a bit slow to load. But if we compare it to GM directly, we're just going to do a one-to-one comparison here. Equity value, 57 billion versus Ford's 40. Enterprise value, Ford is slightly bigger. Revenue, Ford is slightly higher. Revenue growth rate, Ford is slightly less. EBITDA, much less. Profit-wise, a lot less. Look at these margins, 6% compared to 2. Price to sales, price to book, and PEG. Price to sales, market average is about 3. These are much lower than that. Price to book, the market average is around about 5. Once again, these are a lot lower. Peter Lynch's price to earnings growth. Ideally, you want this under 1. And this is 0.57 compared to GM's 8. EV to revenue, EV to EBITDA, and PE. And EV to revenue, higher. EV to EBITDA, we want a lower multiple. That's why it's very bad. And even on the PE, we want a lower multiple. But average is about $8 a share. Next, what we'll do is we'll look at, now unfortunately this is Toyota, so the revenue figures and the enterprise value will be in Japanese yen, but the ratios will still be there. So we'll ignore the 47 trillion yen here. This is yen, not dollars. But if we look at the revenue growth rates, a lot higher for Toyota. Profit margins a lot higher. Price to sales, price to book a lot lower. If it was valued at the same as Toyota, it would be $11 a share. But obviously Toyota has higher profit margins, higher revenue growth rate, things like that. And finally, what we'll do actually, now not a direct comparison again, but the king of motor companies at the minute, Tesla. If Ford was valued at that, it would be somewhere in the region of $60 to $340 a share, all over the place. Much bigger enterprise value, less revenues, profit. Yeah, that's quite double the revenue of Ford. Ford has double the revenue, of Tesla. Net income 13 compared to 2. all these metrics here, 126p to 114, it would be some in the region of 60 to 340, but that's quite interesting. Right guys, thanks for watching. Please give a like on the video if you enjoy it. Check out my Patreon, $1.50 to help me out. For the sheet it's $4, and if you want a little bit extra it's $7. And yeah, like and subscribe if you haven't, and I'll catch you guys next time.